they tell me about post-market and pre-market stuff, you know? So I know that the average trader has that information. I don't know how they're getting it necessarily, but they do have that information, you know?
And they're at least looking for it, yeah.
They're at least looking for it. They're at least aware of what's happening with it, you know? If they see that Apple's down pre-market $5 and all this, you know, the market's already been sliding for the last couple of days, this coronavirus thing is out there, you know, I've already made a bunch of money the last year or two, I just want to get out and be clear of this, right? So they put in they have 100 shares, they put, you know, selling all 100 shares at market price, right? 'Cause that's what most people do, right? When you do that, market opens, boom, order executes, right? Well, if there's a, you know, couple thousand people doing that for a couple of million shares, right? That's going to bring the price down. And then if that continues to happen throughout the whole day with the whole market, right? Market orders, because it's a crowd mentality, crowd fear, right? Because that's exactly what happened with oil. That is exactly what happened with oil, right? And I was actually
that's not even retail. That's not even retail.
That's not even retail. Exactly, right. And one of the hedge funds guys that I was listening to, he said that OPEC actually releases information specifically on Sunday night or over the weekend, so that they can have this kind of run up or run down in oil prices.
Like dramatically on Monday morning.
Exactly. Yeah.
So they release that information when the market is closed. Yeah, so people can't trade on the moment. Yeah. By the way, so if we think about how market orders get filled, right? So if you have a huge stack of market orders that like come into the market, then what ends up happening is they end up like if their market sells, right, like a huge number of them because you know, the market's panicked, then what ends up happening is you get all like the limit buys. Those just get filled one by one and wherever they are, right? So you just get the next highest limit buy, and depending on how many limit buys there are sitting there, if there are not many, if there are very few limit buys, then you're going to run through those. You're going to run down in price as you get through all those limit buy orders very quickly, right? So like in a situation where everyone's panicked and people are scared, you may have, as an example, like 100. You may have like 100 market sells, right? Like waiting, and you may have
100 market sell orders waiting.
Yes.
Okay.
And let's just, for simplicity, let's just assume each order is like one share, right?
Sure.
And then you may have one limit order. And say current market price is $50 for this stock, for example. You may have one limit order to buy at 50, and then nothing else at 50. So the first one gets filled at 50, and then the next waiting limit buy is going to be at like 49, and then the next one is at 48.50. Right?
Exactly.
These fills they just fill like they keep running down until you fill all those market orders.
And what if someone like you or I have I have limit orders in for some equities at like pretty outrageous prices. You know what I mean?
Yeah, sure. At low prices.
Low price. I mean, of course, they're based on chart patterns and what I think certain things will retrace to. But should something
maybe
correct
30%
overnight,
down, 40% down. Yeah.
Exactly. And so and for some of these lower price share stocks, 30% is not just like $2. You know what I mean? So it's not that big of a deal, especially for some of these gold miners that I'm looking at and everything. For something like a $200 share, 30% will be $60 $60. So it's quite considerable. But for a gold company or a gold miner or something, 30% is much different. So I mean, you're absolutely right, and I think that could happen. That could have been like one of the biggest reasons the market dipped the way it did.
And in that scenario, when very few people want to buy, right, and very few people are going to be willing to buy at current market prices, I think that's the mechanism by which price violently falls. But there's no limit, there's no liquidity on the buy side at those higher levels.
Right. Okay.
Those higher prices.
So here's my question. Right? So all that happened. The prices came down. Right. So you have a bunch of people that sold all these shares. Right.
Okay.
Who are the market participants that purchased these shares, these equities, to bring the market back up? Because there's a
runs in reverse,
point. Right? Well, yeah, but no, I get that. I get that it works in reverse. But what I'm saying is there has to be a psychological shift for people to re-enter the market, right? So when coronavirus is, when coronavirus is still ravaging, right, quote unquote ravaging, right? The countries are being shut down. Cruise lines are stuck out in bay, right, like a couple of miles from bay. They're not even letting them come back in, right? No one's letting planes are grounded, right?
Right. Yeah.
Hospitals are surging. New York shut down. The Navy is going over there. I mean, think about what America was like at the end of March last year. It was, the hospitals were, the grocery stores shelves were empty. There was a toilet paper shortage.
Yeah, right.
Remember, bullets and guns were completely gone. The streets were empty. The highways were empty. Remember that, right?
Absolutely,
okay. Yeah. On April 1st, when the market started going back up and everything, right? The market's like, let me pull up the market real quick. I'm just going to pull up. Apple stock.
I think
Apple's. Go ahead.
Real quick. I think to your point about psychology, right? What is that? Like psychology has to shift for the market to change direction, right? So I think a big answer is all the emergency measures from the government and from the Fed. They had all those emergency meetings. What's that?
Go ahead. I'm listening. Go ahead.
Oh, okay. They had all those emergency meetings. They had all the emergency rate cuts, emergency stimulus. The government announced that they were going to be supporting people and providing stimulus checks. So that is and especially since like the Fed and their interventions in the markets is nothing new. So Wall Street is keenly aware, and they're hanging on every word of the Fed. This is nothing new, right? This has been happening for decades. So I think that is when they see and they hear that the Fed is going to do exactly what they expect, that they're going to have tremendous support from the Fed. I think that is the psychologist like, okay, like the Fed is going to do everything they can to maintain the market at these high levels. Boom.
So are you saying that?
And that's where smart money. I think that's where smart money starts deciding, okay, like let's buy, because the market is already down like 30-40%, and the Fed just announced that they're going to be supporting the market, dropping interest rates, stimulating. Smart money, I think at that point knows, okay, now we're probably around bottom and we can buy now. I think that's where the psychology shift happens.
Right.
Yeah.
Yeah, that must be. That
quickly follow suit. Yeah.
What?
And then other participants quickly follow suit, and then we can run the thought experiment in reverse, right? So when you have, like you were saying, when so many of these like unsophisticated or retail investors, they use market orders, right? And now they're saying that. Now they're saying that like they hear all this support from the government, everything's going to be okay. The Fed's going to got your back. They're already seeing that they're seeing big green candles and big green days now for the first time in like a couple of weeks. I think so now you're going to see a lot of market orders to buy, and again you're running through all the limit orders. You're running through all the sell limit orders, right? And there's not going to be many at those levels. All the sell orders have already been filled. Everyone who wanted to sell is likely already sold. There's far fewer sellers left, waiting for orders. And so now you have a huge glut of market buy orders at those low levels, and you're running up in price. You're running through all the limit sell orders that are waiting. And so that happens, right? So like it happens in reverse, where you just don't have much sell side liquidity. So price has to go up to find higher and higher sell prices where you have liquidity at higher prices. And so there you have your V-shaped, event in the market.
So you're saying so market participants like the unsophisticated retail buyers are going to put market orders in, right? The more sophisticated buyers, what are they putting in? Are they putting in limits? What are they doing?
Well, if we're assuming that in this scenario they now have confidence in the market, the Fed is there, the support is there, we think the market's going to go up. At that point, they're buyers. And whether they're limit or market doesn't matter too much. They're probably limit, so Yeah,
right.
It probably doesn't matter. The only real thing that matters tremendously is the side that they're on. The side that they're on is buy. Right. So that's what really
and as they're buying, the price is gonna as they're buying, the price is gonna go up. And every time they put in a buy order, I'm assuming there has to be because these are big these are institution guys, right? Probably, right?
It's big quantity. Yeah.
Big quantity. So when they're buying that order, right? This is my guess. My guess is if you have somebody over at JP, they're like, hey, we want to execute an order for a mom and pop whatever, like some 401k somewhere
or whatever. Yeah.
For a pension fund, we want to buy Apple, whatever, right? I'm assuming there has to be somebody on the other end that's got to sell them that, right? So my guess is my guess is there's somebody that didn't get out at a on the way down that's going to be willing to sell it to them.
Sure. Yeah, someone who's looking for just a small like a small bounce up.
Small little small little bounce up. Yeah, it could be a couple of points.
There's probably going to be a lot at this moment in the market. Though, there's going to be a lot fewer like waiting sell orders. There's going to be a lot fewer sellers that are sitting there because so many of them have already filled. There was already such a dramatic sell.
That brings the price up, right? And when that brings the price up, the unsophisticated buyer sees this and they put in market buy orders, which continues to bring the price up, which brings in perhaps more of the pension, the less sophisticated pension, funds and whatnot, right? Because inevitably you're going to have the Atlanta City Pension Fund, which I don't know who runs it, but I highly doubt BlackRock's running it, right? I don't know. The Atlanta,
or Logan, Fire.
Exactly. Right. So things like that. Yeah, that makes sense. But the question is, did that create enough of a bump, over those sustained 6 months, 7 months, right?
Okay.
To get the market to where it is today? And I don't know. Because you still have so many people out of work, right? You still have so many governments, you still have all these cases that all these people out of work, all these people that are underpaid. There's people that that got minimum hours, right? All these small businesses that went out of business. You have all these people taking money out of their 401ks to pay for expenses and stuff. You got all kinds of stuff like that happening at at levels that weren't happening before, right? So my question is, I personally don't think the rise in the market is. I don't think it makes sense. I still don't think it makes sense.
I think there's. I agree with you in a sense, right? It doesn't make sense. The difference between Wall Street and Main Street, right? It's So in the same way, I agree with you. It doesn't make sense. However, there is some explanation because this is a scenario, and I think the explanation definitely involves